Investing in the stock market can be a great way to grow your wealth, but it can also come with risks. Making mistakes in the stock market can cost you time and money, so it's important to know what to avoid. By avoiding these common mistakes, you can increase your chances of success in the stock market. This can mean the difference between earning a solid return on your investment and losing money. 1. Impulsive buying and selling. One of the biggest mistakes investors make is buying and selling stocks impulsively without considering the long-term implications. This can lead to emotional decisions that may not align with your investment goals. 2. Over-diversification. While it's important to diversify your portfolio, too much diversification can lead to a lack of focus and reduced potential earnings. Make sure to strike a balance between diversification and focus. 3. Not researching enough. Before investing in a stock, it's important to research the company and understand its financials, future prospects, and overall market position. Failure to do so can result in costly mistakes. 4. Relying on tips. It's important to make investment decisions based on your own research and analysis rather than relying on tips from others. Not all tips are trustworthy, and following them blindly can lead to mistakes. 5. Chasing high flyers. It can be tempting to invest in stocks that are performing well, but this can also lead to overpriced investments and potential losses. It's important to consider the long-term potential of a stock rather than just in its current performance. 6. Develop a plan. Before investing in the stock market, it's important to have a plan. This should include your investment goals, risk tolerance, and strategies for achieving your goal. Having a plan can help you make more informed investment decisions and avoid impulsive decisions. 7. Educate yourself. Continuously educating yourself about the stock market, investing, and the companies you're interested in can help you make more informed decisions and avoid costly mistakes. 8. Be patient. Investing in the stock market is a long-term game. It's important to be patient and not make impulsive decisions based on short-term market fluctuations. 9. Don't put all your eggs in one basket. Diversifying your portfolio can help reduce your overall risks, but it's also important not to have all of your investments in the stock market. Consider investing in other assets such as bonds or real estate to diversify your portfolio. 10. Focus on long-term goals. Keeping your focus on your long-term investment goals can help you avoid impulsive decisions and stay on track. It's important to remember that investing in the stock market is a long-term strategy and not a get-rich-quick scheme. Investing in the stock market can be a great way to grow your wealth, but it's important to avoid common mistakes. By developing a plan, educating yourself, being patient, diversifying your portfolio, and focusing on long-term goals, you can increase your chances of success in the stock market.